The script is never varying. They print tons of money, and it all goes to disproportionately to the top 1/10 of 1%. Then they're all shocked. Then they say we're going to raise taxes. And of course, the taxes are only applied to reported income. And so most of the money that gets printed goes into that offshore pool of capital managed by the big four accounting firms that never sees the light of a tax agent and never gets taxed. It's never reported.
Today we have Bitcoin maximalist Max Keiser giving us an update on how the Fed money printing is affecting inflation, why banks are collapsing, and what the crypto market can expect in the last few months of the year. With cryptocurrency going through a difficult time, Bitcoin's value will be put on full display before the halving of 2024. Investors and crypto analysts say that whenever there's a sell-off, to be aware of any projections that indicate a lower price point of the prevailing downtrend. Keiser has been warning people that fiat currencies would collapse and why Bitcoin is a significantly better store of value, which we're seeing play out in real time. The pricing on Wall Street continues to erode trust with investors, and we're starting to see the negative effects on the market as we head into the fourth quarter of 2023. Let's get into the interview with Max Keiser as he gives his prediction on the banking collapse and how this will affect Bitcoin in the next few months. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Yes, it's true that the top 1 or 2% pay most of the tax, but only on their reported income, right? And they only report maybe 10 or 15% of their actual income. And the rest goes into that black market, that black pool.
Well, not even that, Max. So they don't receive the printed money as income. They receive it as stock price gains, as asset price gains. They own all the assets. The ordinary Joe bag of donuts, the guy in the bottom 90%, 95%, they work for a living. They receive an income. So they're the ones that are getting taxed on the new money because they receive their money in income or wealth transfers from the government. So the top 1%, Elon Musk became worth 300 billion on paper, not because he was like working hard and receiving a paycheck of like 50 billion a year. He was receiving, a stock price gains, right? So as they point out in this, so there was 42 trillion new printed money in the 2 years.
Right.
And almost all of it, like over half went, 2/3 went to the top 1%. And they said, so every billionaire, a billionaire would receive $1.7 million for every $1 somebody in the bottom 90% received. So they received 1.7 million. So that's the problem with that fiat system and that fiat corruption in an age of, like I always say, where Bastiat said, when plunder becomes a way of life for a group of men in a society, over the course of time, they create for themselves a legal system that justifies it and a moral code that glorifies it.
This kind of black pool of assets that I'm talking about, that within that pool, there is asset sales and income generated. And the asset sales are not taxed, and the income generated, let's say on a bond, for example, is also not taxed. So that's what I'm saying. When you have a tax evasion complete in that pool, and that's estimated, last I saw, roughly $25 trillion is just captured and managed by those four big accounting firms. Nothing's ever taxed in there. Once something goes in there, it's gone forever. No government ever sees it. The disproportionate between, as we've said for a while, it's gone from quintillionaires, and it's gone from super rich, and it's gone from the Gini coefficient. That's measuring the wealth gap in different countries. And we see, for example, France usually has a lower Gini coefficient than maybe the United States, for example. But we're so far off the charts in terms of even Gini coefficient. We are now in a period, you've got to call it neo-feudalism, where 99.9% of the global wealth is controlled by a few thousand people. And that's no longer akin to any economic system other than feudalism.
Right. Well, again, this is the same headline we've read over and over for years, for 20 years now. Before Bitcoin, we talked about gold in relationship to as some sort of, exit strategy from fiat and fiat fraud, financial fraud, banking fraud, central banking fraud, money printing, inflation. That was the only option back in 2003, 4, 5, 6, 7, 8, 9. And then we found Bitcoin, but they always have that same headline, the financial news. Like this is part of that, dystopian, sort of fun dystopian. I saw a headline go through there where there are like 300 agencies in the U.S. like looking at all the any of your transactions. Like there's a collection of your transactions that all these agencies are looking at in the U.S. or your financial transactions, but that they're gathering all this data, they're building this infrastructure while you're in that matrix, that you're just sitting there in this free money matrix where you think you're in a free money matrix. Again, remember, they're giving you $1, and for every dollar they give you, and you're so happy and you're like, yeah, just feed me more, baby. Like every time they give you one more dollar, they take a 1.7 million. And of course, over the course of just these 2 years since they started it, or maybe it's almost 3 years now, there's a huge gap that has emerged that you will never be able to jump across that.
No, I mean, just to put this into context, again, this is a story that we've been reported on many times over the past 20 years. They give the average Joe $1 and they take, and I'm so old, I remember when it used to be they take $100,000.
Yeah.
And then every few years that number gets bumped up. Now we're at 1.7 million.
Yeah.
And the feudalistic nightmare that's unfolding is one where you literally have a society that's developed. I mean, people just have to look at the images on the street. It's depressing to kind of describe exactly what's going on. We need to start pulling our cash out of the system completely. No more philanthropy projects, no more good guy, no more Mr. Nice Guy. We need to start pulling our money out. And we saw liquidity dry up, and we saw the response from the Federal Reserve Bank was to lower rates and inject lots of cash. And a lot of that had to do with those with a lot of resources were pulling it out and putting in that offshore kind of black pool of capital. And I think we're still kind of in that period where the people who have, the oligarchs and the robber barons from the 1920s, a lot of them went on to build libraries or they built social programs. They felt an obligation to give back in a huge institutional way, build universities, build schools. We don't really see that anymore. I'm open to be debated on this point because I think that those with those resources are really just hightailing it out of town. They're like, we want to get out of here.
We've talked about the cycles like the fourth turning, but one of them that we talk about is the Triffin dilemma, which had been identified long ago during, the Bretton Woods days, where they were saying, well, part of the problem with the U.S. dollar being reserve currency is, exactly what's happened. They'll have to export all their jobs and manufacturing because you need a way to get U.S. dollars to the rest of the world. Right? If your currency, if your national currency is going to be the global currency, you've got to send dollars overseas. So how do you send dollars overseas? Okay, we price oil in dollars. That's one way.
What we've seen now in the last couple of years is the flip side of that. Now you've got inflation, not deflation, and your income is not keeping up. And now you've got a loss of standard of living.
Yeah, sure, because there's lagging. Obviously, it was an epochal shift, right? There was a huge shift. First one came in 1971, but then 2001 was the total abandonment of the pretense that we could sustain the Triffin dilemma situation, that we could sustain a normal wealth creating society based on a US dollar fiat standard. What they did was the gamification, because remember, 2001 was just after the dot-com boom, and dot-com saw Hollywood and Silicon Valley take over a lot of the culture of the U.S. So you could have the CEOs with the see-through pants, and everything could be fun, and CNBC and gaming, and it was like a brave new world, and we could just send everybody $600. Remember, that's the first of the gamification of your disintegration of your society and your economy and your culture.
Wall Street and Silicon Valley are not doing what the early Bitcoin investors were doing in 2017. With 80% collapses so far in Bitcoin, the next few months will determine how it will bounce back. In the meantime, some experts predict an $15,000 bottom price for Bitcoin soon, seeing a recent downturn since its $30,000 price point in June. If their forecast comes true, it would inflict further pain on Bitcoin and the broader cryptocurrency market, which has seen around $500 billion wiped off its value in the past month. Most agree that Bitcoin will survive this cycle, but this is eerily similar to the dot-com bubble of the early 2000s. While most major cryptos are spending much of the day in the red, ongoing investor fears about inflation grows as central banks tighten monetary policy. What do you think about Max Keiser's prediction for Bitcoin and the banking crisis we're seeing unfold? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.